Chapter 1, that is nature, objective and scope of audit. Simple. First we have studied the meaning of the audit. Audit is an independent examination of financial information of an entity, whether profit oriented or not, irrespective of its size and legal form. When such an examination is conducted with a view to expressing an opinion thereon. Done, you know this. And what is the objective of the auditor? According to SC 200, okay. OYA CASA, that is overall objective of independent auditor and conduct of an audit in accordance with standards of auditing. It says that to obtain a reasonable assurance whether the financial statement of the whole as a whole are free from material misstatement, whether due to fraud and error, and thereby enabling the auditor to express an opinion on whether the financial statement are prepared in all material aspects in accordance with the applicable financial reporting framework, and to report on the financial statement and communicate as required by the essays in accordance with auditor's finding. And then what? Whether financial statement give true and fair view and all prepared in all material aspects in accordance with applicable FRF, and reasonable assurance. It is high but not an absolute level of assurance. Meaning of assurance: engagement. Engagement means arrangement to do something. Assurance engagement, an engagement in which practitioner obtains sufficient appropriate sufficient appropriate evidence in order to express a conclusion designed to enhance the degree of confidence of the intended user other than the responsible party about the outcome of the evaluation of or measurement of subject matter against the criteria. Simple thing here, practitioner is he obtains sufficient evidence in order to express a conclusion to enhance the confidence of the intended users other than the responsible party to overcome the evaluation or to measurement of subject matter against the criteria. Giving assurance means offering an opinion about specific information so users of the information are able to make confident decisions knowing that the risk of the information being incorrect is reduced. Okay, simple elements of assurance engagement. There are 5 things. The first one, it is a 3-party relationship involving practitioner, responsible party and intended user. Assurance engagement involves the above 3 parties. The first one, practitioner, is a person who provides assurance. The term practitioner is broader than the audit. Audit is related to historical information where practitioners may provide assurance, not necessarily to historical financial information. And a responsible party is a person who is responsible for preparation of subject matter, and intended users are the persons for whom the assurance report is prepared, the persons who may use the report in decision making. Okay, and subject matter. What is subject matter? It is it refers to the information to be examined by the practitioner. In case of auditor, it is financial information, as we say financial statement, appropriate subject matter, and who is responsible for subject matter management or those who are charged with governance. Okay, and what is suitable criteria? So this refers to the benchmark used to evaluate the subject matter, like standards, guidance, laws, rules and regulations. In case of audit, accounting standards. In case of audit, accounting standards are the suitable criteria. And when it comes to sufficient appropriate evidence, the practitioner performs audit assurance engagement to obtain sufficient evidence. It is on the basis of evidence and the conclusion are arrived, so is formed by the auditor. Sufficient means quantity, appropriate means quality. Okay, and this to live. And written assurance report is a written assurance report in an appropriate form. The final outcome of an assurance engagement, it contains conclusion that conveys the assurance about the subject matter. Simple. What is misstatement? A difference between ACPD of a reported financial statement and the ACPD that is required or item to be accordance with applicable FRS. ACPD, amount, classification, presentation and disclosure, that is required for an item to be in accordance with the applicable FRF. Okay, misstatement errors can arise due to fraud and error. The distinguished factor between fraud and error is it is intentional and the other one is unintentional. Fraud is intentional and but error is unintentional. So there are some mistakes. There are some examples just go through. When mistakes can be considered as material, when misstatement including the omissions are considered to be material, when if they are individual or in aggregate could reasonably be expected to influence the economic decisions of the users taken on the basis of financial statement. If the individual or aggregate could reasonably be expected to influence the economic decisions of the users taken on the basis of the financial statement. Okay, meaning of FRF not important, and types of opinion, you know this: clean or unmodified opinion and modified opinion. Okay, so when the financial statement are materially misstated, and you have judgment on effect, or the judgment about the pervasiveness of the effect on the financial statement. Okay, I'll tell you. When the financial statement are misstated and that is material but not pervasive, in that case qualified opinion. And in case it is pervasive, then adverse opinion. Okay, so when the financial statement are misstated and it is material and not pervasive, in that case qualified. In case it is pervasive, then adverse. And he's unable to obtain the sufficient and appropriate audit evidence. In that case, if it is not pervasive, then qualified, and if it is pervasive, it can be disclaimer of opinion. Okay, so meaning of pervasive, or term pervasive, is to describe the effect of misstatement on the financial statement. It is based on pure auditor's judgment, and effect of pervasive is not confined to a specific item. Matlab, if it is confined to a specific item, na, that is not called as pervasive. If it is confined to many items, na, then it is called pervasive. So even if it is confined to a specific item, na, in that case a pervasive, it represents a substantial portion. But let's see, there are so many dots here, but this dot is so big. So this is confined to a specific item, but this covers the substantial portion. In that case, even this is called a pervasive thing. Okay, so in relation to disclosure, the effect can be considered as pervasive if it is fundamental to users understanding the financial statement. It can be considered pervasive in case if it is a fundamental to users of the financial statement. Those who are charged with governance, whose responsibility in overseeing the strategic direction of the entity and obligation related to the other party, who is management, the executive responsibility. So is the management and preconditions of the audit. So in order to establish whether preconditions of audit are present or not, auditor has to determine whether the financial reporting framework is acceptable, and obtain an agreement of management that it acknowledges and understands its responsibility for preparation of financial statement in accordance with the FRF for internal control, as management considers it necessary to provide auditor with access of information, additional information, and understood activity to the person within the entity. So what is internal control? It is the process design, implemented and maintained by those who are charged with governance, management, and other personnel to provide assurance with regard to reliability of financial reporting, effective and efficiency of operations, safeguarding of assets, and compliance with applicable law and regulation. What is test checking? It is application of audit procedure to less than 100% of the transaction. It is also known as sampling. Okay, it should be in such a way that every item should have equal chance of selection. Then judgment, the application of relevant TKE, that is training, knowledge, and experience in making informed decision about the course of action that are appropriate in circumstances of audit engagement. So is like professional judgment is essential to proper conduct of an audit. Explain. In that case, yes, it is necessary. So it is necessary in decision about, it is necessary in particular regarding decisions about materiality and audit risk. Listen, materiality and audit risk, the nature, timing, and extent of procedures to meet the requirement of SA, and evaluating whether sufficient and appropriate audit evidence has been obtained, and evaluation of management judgment in applying applicable FRF, and then drawing of conclusion based on the audit engagement is obtained. Okay, then framework of conduct, just go through. Risk assessment and risk assessment procedure. Risk assessment is done to assess the risk of material misstatement. Okay, risk is defined as a risk that the financial statement are materially misstated prior to the audit, and these procedures include two things: are used to obtaining understanding of the entity's environment and including the internal control in order to assess the risk of material misstatement, determine the nature, timing, and extent of further audit procedure. Okay, after RAP, the risk assessment process, auditor can assess the level of risk of material misstatement. Once risk of material misstatement is assessed, he can decide the NAT of FAP, that is further audit procedure. So nature matlab compliance or substantive, extent matlab sample size, less work, more work, timing is interim period or year end, or all year end in detail. Okay, so risk assessment procedure does not provide audit evidence sufficient to audit opinion. They are required all financial statement audit. Simple. Then further audit procedure, you can call it assess, like response also. You can also call it response to assessed risk. Okay, Then compliance procedure to test or test of control. So audit will test internal control to ensure that initial understanding of IC was right or not, and he will check the design and if it is good na, if it is not good na, then he will leave it and go for sustainable procedure. If it is good, then test efficiency also. Test of efficiency is operational and continuity. If internal controls are efficient, then it is going to have a direct if internal controls are efficient, then it is going to have direct impact on nature extent of substantive procedure. So what is substantive procedure? Audit will check transactions, ACPD, account balance, presentation and disclosure through analytical processes and test of details. So it can be vouching and verification. Vouching is one for income statement and verification is on balance sheet. Then we studied assertion, that is important. Assertion, representation. Assertion refers to the representations by the management, explicit or otherwise, that are embodied in the financial statement. By stating the financial statement or compliance with the relevant FRF, and management is making certain assertion with a about proper recognition, measurement, presentation, disclosure, and financial statement that any company disclosures. Auditor will check those claims or assertion. The assertions are used by auditor to identify potential errors or inaccuracies in financial statement. Can be divided into three categories. Okay. Transaction, account balance, and presentation and disclosure. Sometimes presentation comes here also, you know this. So in case of transaction, that is income and expenditure account balance matlab balance sheet, and this one is leave. Transaction, OCACC, account balance, ERCV. This is OCCA. Transaction, OCACC. Okay, the first one is occurrence, completeness, OCACC. Occurrence, completeness, accuracy, cutoff, and classification. When it comes to transaction, occurrence, that is transaction that are recognized in the financial statement have occurred, and did it really happen and such pertain to the entity. Just completeness, all transactions have been recorded. Accuracy, amount and other data related in the record transaction have been recorded properly or not. Cutoff, that have been recorded in the current accounting period, and classification has been into proper accounts. Okay, OCACC, occurrence, whether it has occurred or not. Completion, that all transaction has been recorded. Accuracies, amount that have been recorded appropriately. Cutoff is whether it has done in correct accounting period. Classification, whether it has been classified into proper accounts. Then we went for account balance, that is ERCV. So E, R, C and V. So E means existence, assets, liability that exist or not. Rights is rights and obligation, that is entity holds or controls the rights of the assets, liabilities, and liabilities are the obligation of the entity. Completeness, all assets are recorded completely or not. And valuation, whether they have been whether they have valued appropriately or not. Amounts and the resulting valuation allocation are done appropriately or not. Then when it comes to presentation disclosure, OCCA. Okay, OC and CA. Okay, O is occurrence, and you can say it as a right also, whether it has occurred and pertain to entity or not. Completeness, all disclosures have been included or not. C means classification, whether they have appropriately presented, described, and have clearly expressed. And CA, the last one, is accuracy, whether they have financial and other information are fairly and are in appropriate amounts. Okay, just go through this one. Then we studied about audit evidence. It is the information used by auditor in arriving the conclusion on which auditor's opinion is based. Information used by the auditor at arriving to the conclusion on which auditor's opinion is based. Audit evidence includes both information containing entities record and underlying statements and other information. So other information means simple things that authenticates the accounting records or supports the auditor's rationale behind the true and fair presentation of the financial statement. This can be minutes of meeting, written confirmation of trade receivables and payables, and manuals containing the internal record. And what are these accounting records? Accounting records are the record of initial general entries, invoices, contracts, the ledgers of the general entries, initial entries, supporting records, and records such as worksheets and spreadsheets. Okay, then audit risk. The audit risk that audit expresses an inappropriate opinion when financial statement are materially misstated. Audit risk can be divided into two types: risk of material misstatement and detection risk. And risk of material misstatement, that is inherent risk and control risk. Inherent risk is because of nature and judgment, and control is because of failure of internal control. So what is not included in audit risk? That audit expresses an opinion that financial statements are materially misstated when they are not. This is not included. And audit risk is just process of auditing and does not refer to auditor's business, like loss from litigation, adverse publicity, or any other events. Okay, inherent limitations of SC 200. This is very important. Limitations of audit as per SC 200 Oyakasa. Enables the auditor to express an opinion on such financial statement. Auditor is not expected and cannot reduce the audit risk to zero, and cannot therefore obtain an absolute assurance so that the financial statement are free from material misstatement due to fraud and error. This is because the inherent limitations of the audit, which result in most of the audit evidence on the auditor which draws a conclusion and based on auditor's opinion, and being persuasive rather than conclusive. Okay, the process of auditing, however, suffers from certain limitations, and limitations which cannot overcome irrespective of the nature and extent of audit procedure. The limitations arise from these 5 things. Okay, first one, nature of financial reporting, nature of audit procedure. It is not an investigation, timeliness, and future events. The first one, nature of financial reporting. While preparation of financial statement, it involves judgment by the management. So this judgment may be subjective and or a degree of uncertainty, and therefore the auditor may not be able to obtain absolute assurance that the financial statement are free from fraud and error. On the premises of controlling that acknowledges responsibility in financial statement and applicable FRF investing internal control. However, the controls may have not operated to produce reliable information and has its own limitations. The first one is financial reporting. Second one is audit procedure. There are practical and legal limitations and audit's ability to obtain audit evidence. For example, he cannot test all the transaction or balance, and management may not provide complete information. Okay, 2 things here: he cannot test all the transaction and balance, like he can only go for sampling, and management may not provide the complete information. The management may consist of dishonest and unscrupulous person, so they may be concealing fraud and by designing sophisticated and carefully organized scheme so that it is very hard to detect. Okay, so audit is not an expert in authenticating documentation also, so that may lead to accept invalid document as a evidence on the basis of unauthentic documents. Okay, and the last one is it is quite possible that entity may have entered into a transaction with the related party. Okay, 4 things. First one, there is a practical and legal limitations. The first one, he cannot test all the transaction and balances. He has to do sampling, and management will not provide all the complete information. And in management, they may be fraud, and they might have created some sophisticated and carefully organized schemes. And auditor is not an expert to authenticate the documents, and they have entered into some transaction with related parties. It is not in nature of investigation. Audit is not an official investigation, hence auditor cannot obtain absolute assurance that the financial statements are free from management due to fraud and error. Simple. Timeliness. Okay, so the relevance of information decreases over the time, and auditor cannot verify each and every matter. Therefore, the balance has to be struck between reliability of information and cost of obtaining it. But he cannot sit and verify everything, so he has to balance between the reliability and the cost of obtaining it. Next one, future events. Future events are the conditions that may affect the entity very badly or adversely. Adverse event may be seriously affect on entity's ability to continue its business or going concern. The entity may cease to exist in the future due to change in market condition, emergence of new business models or products, or due to onset some adverse events. So because of this limitations, there is an unavoidable risk and some of middle statement. It may be not mitigated, and audit is properly planned and performed accordance with SA. However, this inherent limitation is not a justification for auditor to be satisfied with less than persuasive audit evidence. Who appoints the auditor? Who owner's member in company or government authorities में as per law CAJ appoints. Okay, then to whom the audit report is submitted, whoever appoints him. So there are three types of assurance engagement: audit, review, and other assurance engagement. Meaning of review and meaning of review: audit versus review. So review engagement is an example of limited assurance engagement. Entity is not legally bound to opt financial reviews, and reviews may provide assurance, costless and cause less disruption. Audit and review are related to financial statement prepared on the financial statement. Thus the difference as follows. When it comes to review or reasonable assurance and limited assurance, okay, when it comes to reasonable assurance, now there is thorough procedure, and here there is less procedure. Here test of control and substantive procedures are there that are done in more depth. Here only inquiry and analytical procedures are there. This is high level assurance, this is moderate, or it can be lower level of assurance. Okay, so here the subject matter conform with the suitable criteria and all material aspects. Subject matter is plausible, matlab it does not match in the circumstances, and the language signifies the assurance is of moderate or lower level. Here the positive worded opinion will be there, here the negative worded opinion will be there. It consists of more regulations and standard, here there is less. And the example is audit, and here it is review engagement. Here they say in opinion it gives true and fair view, they say nothing has come to our attention and all. And assurance on prospective financial information, they have asked this. So prospective financial information means information which is based on assumption and events that may occur in future, and possible actions by the entity. It can be form of forecast, or it can be projection, or combination of both. Okay, in case of assurance engagement, now the financial information, the practitioner obtains sufficient audit evidence that management assumptions of the is based or not reasonable. The prospective financial information is properly prepared on the basis of assumption and properly presented in all material assumptions are adequately disclosed. So it is future oriented, is not in a position to express an opinion, so will be achieved, and that gives a moderate level of assurance. Okay, so quality control and engagement standards. Why standards are needed? Important. Okay, carrying out the established benchmark with global practices. Quality standards improve the quality of the financial reporting, thereby diligent decisions. It promotes uniformity carried out in this transaction, and equip professional accountants with professional knowledge and skill. And the last one, it ensures the quality. First one, it establishes the benchmark in global practices. It provides quality financial reporting and diligent decisions. It promotes uniformity with the standards. It equips the professional accountant with the knowledge and skill, and audit. It ensures the quality. SQC, this one, perform audit, review, and historical information and other assurance related services. So this is a firm's responsibility, and they have to comply with the professional standards and legal requirement, and issue appropriate results. So engagement standards issued by and collectively known as engagement standards. These apply in audit and historical financial statement, and this apply. So engagement standards, man, this all will come. Okay, SI say in historical financial statement, SR in review of historical financial statement, SA is applying assurance engagement other than the audit. SRE is just like related services, that is information and compilation engagement. Okay, and standards on auditing, this apply in the context of audit, and it is done by independent auditor, and it is important to remember audit is done off by it only apply in historical financial information, and they can also be termed as performance benchmark of the auditor. Okay, the main purpose is to bring uniformity as possible in work performed by the auditor, and audit cover broad range of topics, documentation objectives, documentation planning, risk assessment, this and all you will write. SA 200 230 is documentation, 315 is identifying it, assessing, 500 is audit evidence, 700 is forming an opinion. Okay, just go through. Standards on review engagement. Standards on review engagement apply to review of financial statement. This is a limited assurance engagement, provides assurance which is lower than the provided in the audit, and it is due to it has only fewer procedures compared to audit. Since review engagement only provides assurance to the users, it involves obtaining sufficient and appropriate evidence. For example, he must review interim financial statement of the entity. So examples are two things: SRE 2400 and 2410. Assurance engagement to review historical financial information, interim financial information performed by independent auditor. Okay. So it may be noted that the both standards of auditing and standards of apply to engagement involving historical financial information. Assurance engagement scheme, it applies to non-historical financial information and includes various services beyond the audit or review and of historical data, such as examination is of prospective financial information and assessing the non-financial aspects of the internal control. The example is 3420 examination of prospective financial information related to compilation of pro forma of financial information recorded. SRE, it is simple. AUP. SRE services govern engagement for agreed upon procedures of financial information and compilation engagement where no assurance is provided. Okay, so outline duties which include specific financial data checks or assist in preparation and presentation of preparation and presentation of financial information without expressing an opinion. And for example, he may agreed upon saying that accounts he'll check the accounts, he'll perform certain procedures relating to accounts payable, accounts receivable. Simple. The engagement in which practitioner may be called to assist the management with preparation and presentation of financial information without assurance on this given. SRE 4400 and 4410 engagement to perform agreed upon procedures, comparison engagement. Okay, duties in relation to engagement and quality control standard. It is a duty of professional accountant to see the standards have been followed in and engagement undertaken by them. Ordinarily, they are followed by professional accountants. So, however, a situation may arise when specific procedures are required in standards without being ineffective in particular engagement. In such cases, he has to specific ineffective in some cases. There may be ineffective. In such cases, what you have to do: document how alternative procedures are performed, reasons for such departure, and in report he should draw attention to such departure. Okay, unless it is clear. Then so document the alternative procedures, reasons for such departure, and is to be documented unless it is clear, and he has to report. The report has to draw attention to such departure. Disclosure is not exempt in case of compliance with standard. Scope of audit, what is included? Scope of audit includes coverage of all aspects of the entity, adequately cover all aspects of the entity to the financial statement are being audited, and reliability and sufficiency of financial information and proper disclosure of the financial information. First, it covers all the aspects of the entity. Then auditor must ensure the reliability of accounting records and the source of data are sufficient in foundation of the financial statements, and auditor shall access the reliability of and sufficiency of financial information through analysis of accounting system, internal control, execution of relevant tests, inquiries and procedures. Okay, then proper disclosure of financial statement. The auditor must ensure FS is adequately disclosed in relevant information and comply with adequately disclosed relevant information and comply with the statutory requirement, verifying their accurately summarized records and transactions and judgment in the major. The auditor evaluates management judgment in financial preparation. The auditor evaluates management judgment in financial preparation, including selection and consistent of accounting policies such as depreciation method and fixed asset and all those things. Financial statements are based on historical financial information, which includes financial data of past economic conditions and like purchases, sales and things. See what is included in the audit. Scope of audit. Okay, first one, it covers all the aspects of the entity that is relevant to financial statement being audited, and reliability and sufficiency of financial information. The auditor must ensure the reliability of accounting records of source of data that provide sufficient foundation to the entity. Then he should assess the reliability and sufficiency of financial information through analysis of accounting systems like internal control, execution, relevant tests, inquiries and procedures. Then proper disclosure of financial statement. He has to ensure whether adequate disclosure of relevant information are made and that comply with the statutory requirement, and he has to evaluate the management judgment in financial preparation, and it should be based on financial information historical financial information. Scope they have asked before, so no need. Benefits of audit. So audited accounts provide a high quality information that gives confidence to the user of the information. In case of companies where shareholders are not involved in day-to-day business, in that case they needed an independent mechanism, so the financial information is qualitative and reliable, hence the interest is safeguarded by the audit. Okay, then audit acts as a moral check of the employees who commits fraud, and they'll have a fear of being discovered by the audit. And audited financial statement provide government is authority, like government authorities, for determining the tax liability. Audited financial statements are relied by lenders or bankers for making their credit decisions whether should lend or not. That means detect fraud or error. And audit reviews the existence and operations of various controls in the entity, hence it is useful pointing out the deficiency. See, there are 1 2 3 4 5 6 7 benefits. First one, it provides high quality information and gives confidence to the user. So when it comes to children, they are not in day-to-day business, so they require an independent mechanism that the information is qualitative and reliable, hence the interest is safeguarded. Then it acts as a moral check for the employees, so that they have the fear of committing the fraud. And it helps for government to in determining the tax liability, helps to it is relied by the lenders and bankers that they have to lend or not. And then to detect fraud and error. And the audit reviews the existence and operations of various control in the entity. Okay, then whether audit is mandatory or not, it is not legally mandatory for all the entities. However, some companies and certain non-corporate entities are required by law when such turnovers are exceeded threshold by given in tax laws or in laws. Okay, so entities like school may need audit to qualify the government grants or assistance. And audit isn't always compulsory, as many opt voluntary audits because of the benefits of the internal governance and the favor of the auditing process. Okay, qualities of the auditor, it is important. So only 3 topics are left. Qualities of the auditor, the first one is tact, caution. So what are the qualities of the auditor? He should be tactful, cautious, firmness, good temper, integrity, discretion, industrious judgment, patient, clear-headedness, and reliability. So these are the things you have to study. T C F G, you cannot. Tact, cautious, firmness, good temper, integrity, discretion, industrious judgment, patient, clear headedness, and reliability are the some qualities of the auditor you should have. In short, a personal qualities that go make good businessman, contribute to making a good auditor. So he must have the highest degree of integrity backed with adequate independence also. And the auditor who holds a position of trust must have the basic human qualities apart from the technical requirement of professional training and education also. He should be a knowledge of an expert. He is called upon constantly to critically review the financial statement, and it is obvious unless him to attempt the task unless he has own knowledge and expert. An exhaustive knowledge of accounting in all branches is sine qua non, that is mandatory in practice of audit. He must thoroughly know all the accounting principles and the techniques. Okay, fourth thing, he should be tact, conscious, fairness, good, and all, and should have highest level of integrity backed with independence. He holds a position of trust, so he should have a basic human quality too. He should be knowledge of the expert, and uh, he should have exhaustive knowledge. And so in all branches is mandatory. You should know thoroughly all the accounting principles and the techniques. Done. So person conducting an audit should take care to ensure the financial statement would not mislead anybody. Okay, in doing so, the financial statement must not mislead anybody. You have to take care of these things: 1 2 3 4 5 6 things. Whether account has been drawn up with reference to the entities of the books of accounts. First one, the entries in the books of account are adequately supported with sufficient and appropriate audit evidence. Now the entries in the books have been omitted. 3. The information conveyed is clear and unambiguous. The financial ACPD amounts are classified, described, and disclosed uh, in conformity with accounting standards. And the statement of account presents true and fair view of the operational results and the assets of the assets and the liability. So there are six things. First, accounts has been drawn with reference to the entries of the books of account. But the entries are supported with sufficient and appropriate audit evidence. None of the entries are omitted. Next, the information is clear and unambiguous, and the financial amounts are classified, described, and disclosed as per the accounting standards. And the statement of accounts provide true and fair view of the operational results of the assets and the liabilities. Done. So what is the relationship between audit and other subjects? So audit and accounting, financial should be there in overall accounting process, law should be there, good knowledge to business law affecting the entity, economics should be there with overall economic environment, behavioral sciences is main way essential to effectively discharge its duties. He should have statistical and mathematical knowledge, as it is like statistical sampling meaning for conclusion, mathematics for verification of inventories, data processing should be there. EDP auditing is itself developing a discipline in itself. You should have financial management techniques like working capital management, fund flow ratio, capital budgeting, and all. Auditing and production. Good auditor is one who understands the clients and business functions such as production, cost system, and marketing. Origin of auditor is not required. Thank you.